Everything you hear today is general advice only and has not taken your personal circumstances into account. If you are considering making an investment, you should speak to a financial advisor.
So what are some of our best prospects for 2024? Well, 40% of our portfolio is invested in underpriced small cap bucket. Companies such as TaskUs, Janus, Destination XL, and Open Lending all belong in here. There are no single individual huge bets. We have found a broad range of value across various end markets and across various companies. Now, part of the reason for this is that the last years have just been terrible for small caps in general. They've derated a huge amount. Another bucket worth pointing out is the quality compounder one. Now, you may be familiar with a few of the names here. We've discussed them in detail in the past, Zebra, Keysight Technologies, but it will always be an important part of a portfolio. Quality compounders trading at reasonable valuations. You can always find some of them in across the market because the market always gets pessimistic at certain points in time. And what I would mention here is that we used the market meltdown back in last October, November to add to some of the core holdings here.
We've already talked about how US housing-related investments paid off for us last year. For completeness here, we thought we would point out it is still important for the fund. It makes up about 13% of the NAV at the moment. Lastly, we remain long the UK. They're all extra whingy over there at the moment, and not just the cricket fans. It is a difficult economic environment in the UK, but it is also a land of cheap stock prices. At one extreme, we own something like a Motor Point, where if the world normalizes, it has the potential to rise several 100% from here. At the other end of the spectrum, we own the market-leading supermarket brand Tesco at 11 times earnings. That's provided resilience for us over the last few years, and it's a business that will be impervious to all but the worst economic downturns. And also on that same side, we own Blunco, which is a truly global business that generates some 90% of its revenues outside the UK.
So looking forward to this current fiscal year, we have an interesting collection of idiosyncratic and defensive positions throughout the portfolio. Just to name a few, around 1/3 of the portfolio is exposed to technology or tech-enabled businesses that should be more isolated from the woes in the economy and exhibit some secular growth characteristics.
We've also got a selection of beaten down micro caps. These are smaller businesses. They've been sold off recently to very attractive levels. An example of this is Jim's group, Viva Leisure.
We also have, as you can see on the slide, we have 10% of the portfolio which is exposed to healthcare demand, which tends to be very uncorrelated with the economy, and in this case in particular it's rebounding from a couple of years of suppressed healthcare consumption due to the pandemic.
And tourism remains a reasonably large investment in the portfolio. Both Tourism Holdings and Experience Co, both these businesses will be going into 2025 before they reach their more normal profit expectations.